tough day for the stock of apparel maker PVH, and an even tougher night as the company reported a good quarter, but then gave some surprisingly downbeat guidance. A forecast cut that has Wall Street puzzling what's happening at this normally consistent company's businesses, including two tremendous brands, Calvin Klein and Tommy Hilfiger. The stock is down badly in after hours, but we know that Manny Chirico, the chairman and CEO of PVH, comes on in good times and in bad times to tell it to us straight. Manny, welcome back to Mad Money. You came here 3 months ago, and the numbers were fabulous. This last quarter was pretty good, but you've come in with a pretty dramatically pessimistic outlook for China and for here that kind of, unfortunately, captures the zeitgeist of what I see in the stock market. What the heck's happened?
Yeah, look, I guess look, in this market in particular, for the business right in front of us, the second quarter, we've really seen some softness in the business, particularly as the first quarter ended and the second quarter started. And I think that's reflected in our numbers and our guidance as we've gone forward. The positive things from our perspective is we've more or less been able to hold our guidance in place for the year, and we're looking for the second half of the year to start to see a bit of a turnaround. We're up against much easier comparisons as we get into July and beyond the second half of the year. And I think we're positioned to capture that as we go forward.
Well, when I think, look, I think weakness in China, weakness in the United States, I just keep thinking it is the headlines. It is the trade war. Because it's not like prices have gone up dramatically and the consumers stopped in her tracks.
Well, particularly in our areas, you know, the discussion around tariffs and the trade dispute, it hasn't hit us at this point yet. So that's not the issue that we're seeing going forward. What we're really just seeing is a slowdown in growth and a slowdown in retail sales in general as we're looking at it. Big impact here in the U.S. is lack of international tourism and tourism purchasing.
Strong dollar has been,
and the strong dollar continues. Currencies from when I was here 3 months ago are down 3 to 6%.
Right.
So we're really feeling it there as well.
Tommy Hilfiger down 4. I mean, people are looking for much better than that. I mean, Hilfiger's a great brand. It has not led you astray for a very long time.
That's true. That's true. Down 4 here in North America. Yeah. Overall, the Tommy brand grew on a constant currency basis about 5%, 9%, excuse me, 4% on a reported basis. So the business internationally continues to do positively, but comps in the United States, look, I can't walk away from it. Comps here in the United States in the outlet channel of distribution where we have a big position is really under pressure.
So, I mean, you're talking about a Macy's, you're talking about a JCPenney.
Right.
These are companies that did not, look, my Chapel Trust owns Kohl's. They did not report good numbers. Look, and is there inventory kicking around now? Is that what's going to happen? Is it going to go to TJX? Is it out there?
So right now, I would say inventories are in relatively good shape.
Really?
Concern would be as things start to back up. We've really seen the retailers react to that, and we've reacted and really put it in our numbers. We took our sales down in the second half. In connection with a real concern about the business going forward, but have been able to hold our profits together so far as we've come here. So we're looking for the business as we start to anniversary some tougher comps next year. The comps get somewhat easier as we get into the second half of the year, and that's what we're pointing to at this point. Right now, as we've come out of the first quarter into the second quarter, the retail backdrop here in the States is pretty challenging.
And that includes e-com, includes Amazon,
well, look,
Team.
Our growth continues very strong digitally. Our growth, that business continues to grow 20% for us. Our owned, operated, and our partner sites that we do, Macy's.com, Amazon.com, that business section up 20%. I think the strength of our brands really plays well there. But we are at a moment, brick and mortar retail, with the trade disputes, the rhetoric around trade tensions that really is created, it's really impacting the consumer spending.
Manny, you and I have been around for a long time. A 3.6% employment rate means that people are buying Calvin Klein and Tommy Hilfiger. That's what they buy. It's not making sense to me, Manny.
Well, I think we're all struggling with that. When you look at the consumer and you look at wages and you look at just the general environment, you would feel much stronger. I think you have to put some things in perspective. This time last year, coming off of the tax cuts, the momentum that was there this time last year, clearly Our first 4 or 5 months of last year, our comp sales were up 11%. In Tommy, up high single digits in Calvin. So you're seeing now a retrenchment off of that. There was tremendous momentum that came out of that first quarter. We knew we'd be up against that. We tried to put that into the numbers, and we delivered the earnings and our sales estimates for the first quarter. But as we look at the second quarter, we felt we really had to pull back there and still have been able to hold it together, but it's in a much more challenging environment. Look, there's no walking away from the fact that the consumer's feeling more pressure right now, here and in China, and you can't walk away from the fact that the trade disputes and the issues are not creating a bit of a hangover with the consumer.
All right, I want to leave it on that because you got Stefan Larsson as president. He's a great hire. He's doing fantastic. He has been all his career to be amazing. He's going to be your right-hand man, or does he want to take over? Do you want to give him the company? What's going to happen? Because he's a talented fashion person.
Well, look, I think our board, myself, succession planning is a key issue for all companies.
You're not going anywhere.
And for us in particular, I just signed a new 5-year contract.
Yeah.
I'm here for the next, as CEO, for the next 3 to 4 years. But I think we've put a plan in place where people can feel comfortable that we have a strategy in place, we have a management succession plan. You know, this will be my 15th year as president, CEO of PVH. And, you know, as you get older, people start to ask questions, how much longer are you going to do it? So I think this takes that out of it.
No one's ever asked me that. Just kidding.
Yeah.
But, you know, I hope that the next time you and I see each other, that the cloud lifts. Because you're doing such a great job. And Stefan's a great hire, and the stuff looks fantastic. And it doesn't seem to matter right now.
I think, in fairness, you can't fight the tape. I mean, I think we're in a... the general sense is the consumer's under pressure. Retail's going to be under pressure for a while. I think we're best positioned to capture the growth and the market share that will come out of that, given our balance sheet strength and the way we've managed the business. If past this prologue, we got to just get through this.
Fantastic. We got to get through it. That's a good motto for me to adopt with the stock market, too. That's Manny Trico, Chairman and CEO of PVH. Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.